Founder. Good afternoon, everyone. I'm Swapnil Pawar, the founder of ASCII Advisors. Today, we'll talk about how we can use the MakeMyFund platform to create your own eFunds, offer them to your clients, and manage it as a fund of your own. Some of you would have seen MakeMyFund in the context of making a customized eFund for your own use. Now we'll see how you can actually even share the fund with a third party, like a client, and have the client copy your fund, invest in it just as you would. So in a nutshell, we're trying to enable making advisors into fund managers who can manage their clients' money directly, especially in the core equity side, where fund management from the big AMCs has been disappointing and the performance has been below benchmark for most of them. So if you have ideas about how to improve the performance, we are here with you. We have developed the entire tech data analytics platform to actually help you create your own fund, see how it would have done in the past, and then productionize it to actually do it for your clients. So without further ado, let me just quickly share my screen and move to that. Have the main screen of MakeMyFund, which some of you might have seen in the past as well. Today, I'll walk you through the full sequence of how to create your own eFund on MakeMyFund, and then how to add a client, and how to actually share this fund with your newly added clients. And then we'll log out as an advisor and log in as a client and see how the clients see it when they're your clients. So let's get started. On the main page, you'll already see these two tabs, Browse Ready eFunds or Browse Build a New eFund. As an advisor who wants to build a new eFund, you can ignore this and just go straight to Build a New eFund. You can see here the 4 categories: highest returns, ethics, themes, and goals. Today, we'll do a simple analysis where we'll build a fund focused on smart beta. As you have seen, the logic of smart beta essentially is in using known factors like quality defined by ROE, ROC, etc., value defined by P ratios, PB ratios, and so on, or EV by beta, dividend yield, and such other known precise parameters to create rules to invest. So it's essentially saying, I don't want to do pure indexing, but I don't want to go about it in a very actively managed manner either. So I'm going to use rules like high PE stocks, low PE stocks will generally outperform, or high ROE stocks will outperform the low ROE stocks, and so on. So if I can do it as a mathematically rule-based model, I don't have to rely on an active fund manager. At the same time, I, as an advisor, don't have to actually do a major analysis of each company, each sector, and so on and so forth. So please feel free to keep adding questions on the side as well. I'm keeping an eye on that. So in here, I've listed 5 factors. We'll keep adding to them in future. Each of them are explained here anyway for your subsequent analysis. Quality broadly is ROE and cash being high in operating profit. Value is the well-known Warren Buffett variety, which is high price to earnings, high price to book, high EV to EBITDA, and so on. Dividend yield is well-known, just dividend to price. Trading activity is liquidity in the stock, stability of it. Low volatility is price, volatility being low, as well as the earnings growth volatility being low. We have a question here before we move on. Does an advisor need SEBI registration for this? Technically, no, because the clients on this platform are clients of ASCII advisors, so ASCII investment managers, sorry. And ASCII investment managers is a SEBI registered investment manager, investment advisor. So on paper, the clients of this exercise are clients of ASCII investment managers, and the individual advisors are introducers for these clients. They can have their own license, that will help, but that's not a must. I've answered that hopefully for both Avik and Jayesh. So now we have a couple more questions before we move on. Okay, so while they type it out, let me just quickly walk you through one version of this. I can build a single factor portfolio saying, look, I just want to focus on quality, forget the rest. Or I can build a multi-factor portfolio saying a lot of quality, a little bit of value, no dividend yield, some trading activity, some low volatility. That's up to you how you design this. Next, you go to universe definition. So before we go there, let me just quickly pick up one question here. So Vanita's question is, highly performing stock need not be declaring high dividends all the time? Yes, of course. So we are not saying that each of these is a foregone conclusion. It's like saying value versus growth. Some of you would have heard that debate in the late 2000s, early 2010s. That there was a lot of talk about companies which have high growth tend to have high PE also. So Britannia had a PE of like 40. Hindustan Unilever also had a PE of 35. Now, does it mean that Hindustan Unilever is a bad stock? Probably not. It's not a great stock from a value perspective, sure, but it could be a good stock from a growth perspective. So conventionally, this was just two factors, value and growth. So either you're a value stock which is undervalued in terms of price to earnings and all, or you're a growth stock where PE is high, but growth is also high. So that's understandable. So people followed these philosophies, if you will. Likewise, dividend yields don't mean much as a exclusion. This is more for inclusion. It's like saying, if you're paying high dividends, one thing is you're profitable. That's why you couldn't pay dividends otherwise. Secondly, you have cash. You can actually give it out to shareholders, which means your earnings are probably not just paper earnings. And thirdly, you're returning cash to shareholders shows conviction that your business model is sound. You're not hoarding cash. The reverse of it doesn't apply. It doesn't mean that if you're keeping cash on the balance sheet despite making profits, it's a problem. We're not saying that. There is another question saying, is this related to small case or Wealthdesk? We have them as our partners, but we are not like either of them. Let me just clarify this point because it keeps coming up in many conversations. In small case or Wealthdesk, what you get to do is you create your own portfolio offline. Like you have your own analysis and you say, okay, I've created this portfolio now. I've done my analysis. I sourced my data. I did my math. And here's the portfolio of 25 stocks, which are high impact. Now you get to put that on a platform that is small case for you. In our case, we are providing the workbench as well. So you don't need to worry about, I need to learn Python to run this, or I need to run a big, massive Excel sheet. Where am I going to get the data from? Is my data accurate? Are the prices adjusted? Is dividend split adjusted? And so on. None of that is required. You just need to say, okay, I want to build a high quality portfolio. You can't do that on a small case. Vinod Prasad's question is this the first step? Yes, it is the first step in the portfolio. So I can step back and quickly show you. So we started here. And I said, okay, we're building a highest return portfolio. First thing is we selected parameters that we liked, and then we went forward. You can select any combination you like. We keep adding these parameters also in future. So in future, we may have 8, 10, like growth, momentum, and so on and so forth. This is an interesting feature that we have, which is you can pick and choose your investment universe. So you can say, look, I have my mutual funds for the large cap. I don't need this for large cap. So I'm just going to stick to mid cap. Or you may say, I want to replace mutual funds. So I want to be in top 100 only. That's up to you. I generally go with top 200. You can even go with top 500. That's fine. So, and this portfolio size, just because you're in top 200 doesn't mean you need to hold 200 stocks. You can hold just 25 stocks. So we adjust it internally, optimize suitably for which stocks to include in which sector and so on and so forth. Now, you can also customize it to the next level here by excluding specific sectors, business houses, or companies. So what I mean by that is you can say, look, I think commodities are too volatile. So I want to keep that out as an entire sector, industry. Or you can exclude a specific industry saying, okay, I want to exclude real estate because it's, a lot of pain right now in that sector, or let's say telecom, I want to be less aggressive with. I might not want to exclude it, but I want to reduce the exposure. And hospitality, because hotels are suffering from a lot of problems. This is not pharma. That's separate. That's where pharma, healthcare is there. This is hotels and leisure and all that. So you can exclude at the level of company, you can exclude sector, industry, or at the level of the full industry, as we said in commodities. You can exclude a business house. You say that, okay, I don't like the way shoppers carry out their business, so I exclude that. You can even exclude government of India and saying, I don't want any PSU stock. So it's all up to you. Next is you can actually start with a business house and build it on that. So I want to build a portfolio only of Tata Group companies, in which case it will be only Tata. You can exclude a specific company and say, okay, this company is just badly run, I don't want to include it, so on and so forth. So this sort of customization obviously is not there. I discarded the changes because I'm building a regular portfolio here. As you can see, we're back to including everything. But you can exclude anything as you like. So that way, you don't have to worry about customizing. Like in mutual fund, you can say, you go to a mutual fund, their strategy is known to you. So it's take it or leave it. Here you can design it whichever you like. Let's got another question here. Like small case, it will work. As I clarified earlier also, the execution is like small case, but you don't need to have your own portfolio building offline tools, put it this way. So think of it this way. If earlier in small case, people were doing their portfolio analysis offline and bringing the portfolio onto their platform to offer it to investors. Now you're saying we are saying on our platform, you can do everything online. You just log in, start building all this, and then make it available to your clients, as I'll show later. Our target is retail investors, so we don't want to do B2C business ourselves. So we are not pitching it to end clients saying you do it yourself. This is for advisors who can say, okay, I build this portfolio, I can invest my own money in it. So to that extent, you are an investor, but it's targeted at pro users, this part of the platform. So the pro users in turn, like advisors and systematic traders and all, can take it to their clients if they like. That's the idea. So we modified our universe. We reduced the stock size to 30. Next is saying how would this portfolio do historically? Is this even going to perform, or is this going to be average? So the thing about smart beta is that you're targeting cost reduction, not super normal performance. So those thematic portfolios can perform superly well. Here you're targeting a 2-3 percentage points above the benchmark, but keep the cost lower, and obviously disintermediate the mutual fund. So it's like saying if a mutual fund was delivering, so last 1 year, for example, 85% of mutual funds have underperformed the benchmark in the large cap category. So in the large cap category, we're saying that generally your returns will vary around 2 to 3 percentage points above benchmark through the smart beta approach. And you save on the mutual fund fees. So that's essentially 1 to 2% saving there as well. If the investors pay 1% for this, of which 0.75 is shared with you and 0.25 is kept by us, you still, everybody is better off except for the mutual funds themselves. So, so before we move forward, couple of questions here. How will your platform help us charge fees under your license? We will be investment advisors to clients. So clients pay us and we pay you. Clients pay us investment advisory fee as a standalone online transfer through RazorPay and others. So we don't deduct it from the investment. And we pay you again straight away, like we pay an introducer. Another question is, as an intermediary, do we have a partnership model? We do, as in this whole presentation is for talking to advisors, saying how can you use this to this thing. But if you're a broker, then we can partner with you to offer this on your platform as MakeMyFund on your platform. You obviously as a broker won't be able to do it as an investment advisory because that's not allowed. But the clients can essentially step into our platform for advice and execute it in your platform. So we are talking to a couple of large brokers for that as well. But their clients actually use this platform and execute through their broking platform. Anyway, we have tie up with 11 brokers who you can execute through currently without having to sign up with any new broker. But you have your own broking platform, then we can try to integrate that also. So your clients then are segregated to show only that broker as an option. Okay, and so yeah, we are happy to work on a partnership model here. Great. So moving forward then to, I'll come to other questions shortly. So here we are loading the portfolio. So just give me a sec. We are yeah. So here's a portfolio. As you can see, we have, since we put quality as a constraint, BFSI is reduced and consumer has gone up. Pharma is also pretty large. Manufacturing is there. As expected, commodities is small. Chemicals, services are all small. Cap goods also. So all these companies are there. Castrol, Page, Glaxo, Hindustan Unilever, large allocations. And you keep going further, you see Astral Polytechnic, Britannia, Supreme, Dr. Reddy's. Keep going further. Last one is Havells Polycab. So that's our current list of companies. This portfolio is visible to you if you're not logged in. So currently I'm logged in as myself, so I can see all this. But if you're not logged in, at this point you'll be asked to log in. So login is costless. You don't need to pay anything for logging in. You need to agree to a fee structure. Even as an advisor, if you were to execute a portfolio through us, it will cost you 0.25% for your own money, because that's anyway the base cost. And so you may not choose to execute any of your clients' portfolios, etc. with you. That's fine, but just your own engagement with us is also that of a client. So in that context, that's the agreement. That's IA agreement. After you register using Google or setting it up new as a new email ID or just a name, doesn't have to be even an email ID. You can log in, register, and then straight away move to seeing the portfolio as we are seeing here. So this is the portfolio. Before we move to next, just a question here. How are the fee structure? Sorry, there is another one. Can an equity franchise use our models? Yes, they can use our models. We offer this through an API version also, but that's slightly more complicated, so it has some associated costs with it. We can take it offline and talk more about it. So for example, if you're a sub-broker of a broker, then we can essentially design this such that the next step that I'll show you now will go to your broker, not the full 11 list. How are the fees structured? Can it be linked to portfolio size? Yes, it is. So we charge about 1% typically. So we charge 0.25 of our own as a base fee, and you tell us for your clients what do you want to charge. So if you want to charge 1% total, 0.25 is ours, 0.75 is yours, that's fine. If you want to keep it low cost and 0.25 each, that's also fine. You want to charge 1.25, that's also fine. Either way is okay. It's linked to portfolio size, of course. Now, coming to the portfolio here itself, right? So you saw all this portfolio. One feature we're going to add in future is you can change it if you want to. That is a problem in a rebalancing case, but at least for time being, you can say currently it is as it is. In future, we will be able to change it also. Next, you go to the portfolio. So now this point onwards, you have two paths. One path is you just want to create a portfolio for your clients, in which case you can simply save it in the client's in a specific name, and then the amount doesn't matter. You can put any number. Generally, I put 5 lakh because in that way, number of stocks is not distorted. Because even large stocks can have 1-2% allocation. 5 lakhs, 2% is still 10,000. Most stocks are 3-4,000 at the max. So you can name it. You can call it, let's say, webinar demo. I'm calling this just so that we can track it later. I'll show you where. And so if I save and invest now, it will take me to the execution gateway. We best see it through the client size because right now we're talking about advisors. So for advisors, it is better to just put a large amount like 5 lakhs. You don't have to invest it. You're just saving it and save and invest later. So what that does, it takes you to a dashboard page. So what you see here is this fund now, webinar demo that we just created, 4th of June. Our mandate was highest returns. As you can remember, it was highest returns, ethical investing, thematic, and so on. So this is highest returns. We said we want to invest 5 lakhs, but it was 499 because rounding off and all our stocks. The current value is same because it just invested today. So that's that. Last rebalance, I'll come to rebalancing later. Status is paper because this is not actually into your demat because we didn't execute it on the broking platform. From a client size, we'll see how it will become live. Now, Returns you can see later on. Today it's just 1 day, so it doesn't have any returns. In future, it will have a line of returns. And as these numbers grow, stocks you can see. You can execute this portfolio anytime for yourself also in future. That will take you to the same page, which says how much money and how much and then the stocks. You can download it, study it at your leisure, and change it and share it with others. You can share it directly also. So if you have this link on a phone, that goes to WhatsApp. If it's here, it will just copy a link. And that link you can share it on a email also. But that's just a backup. The main sharing I'll show you, that's far more superior. Delete is in case you want to just get rid of it. On your dashboard, you'll see all the funds that you created. So we call it eFund, as an electronic fund. So I've created these funds in the past, right? So for example, this is just a fund I had created back in, I think, March or something. And so it will be now essentially a few days later. So it shows some performance. That's weaker, I guess. Anyway, so that's that aside. So you can see any of the historical funds, and then the one we created today was this webinar demo. And so we saw that that's all your funds here. These are it's a superset of your funds, all your funds. It can be 10, 20, 30, 35, as the case may be. Now you can add these funds to how your clients see it. Now, so this is essentially for advisors saying, I want to showcase some of these funds to my clients, not all. They don't automatically become visible to your clients. I'll show you how to add clients later, but let's just assume for now that you have some clients who are added to your book on MakeMyFund. So now if you want to display some funds to them, we have created that fund now. All you need to do is, so as an advisor, I have created these, I have selected these 5-6 funds already to display to my clients, demo clients. But the one we just created is available in this drop-down. So this drop-down, as you can imagine, is the full list of all the funds in a dashboard. And the one we just right now created called webinar demo, I added that. So you can see here at the bottom, you see this enter portfolio webinar demo. I can describe it the way my clients see it. So I'm just describing currently just so that we can catch it clearly. Is this created as a demo fund for the webinar. And obviously you'll put far more detailed description saying large cap fund with quality focus and excluding Government of India companies. You can put any description, that's up to you. Now this work is done. Before we go to how clients see it, we'll take a pause here for a couple of questions, right? Fee sharing question, is it one time or trailing? It's trailing, it's perpetual as long as your clients are there. So if your clients are there for 10 years, then for 10 years we pay you. How do we test the backtest performance for every model that is in use? As I just showed you, so you can select individual factor and then run the backtest. You'll see the full performance. We'll obviously keep adding more models in future. The fees charged, so question is on fees charging. The fees is charged by raising an invoice to the client. The client has to pay through online model. So we have Razorpay as our payment gateway. So you can pay through UPI, a client can pay through UPI, through any of the bank, credit card, debit card, whatever else, or bank transfer. Can I choose all ETFs as part of the list? You can. So you can essentially say all my demonstrated, dashboard funds can be moved here. That's also fine. That's not a problem. Abhishek's question is, without RI license for advisor, won't this affect the compliance rules of SEBI? Oh, well, it's not directly in violation of compliance rules. It is safer for the advisors creating the eFunds to have the license, but technically these clients are actually clients of ASCII investment managers. So the advice that is given out to the clients on, since it's not like you are creating a fund out of the blue and then showing it to us. For that, like small case, you will need RI license, right? You are designing the fund within the parameters of what we are considering as good factors. So it can't possibly go outside the boundaries of that. Given that we are confident of each of these factors standalone anyway, so we are confident that this is good advice. And so hence we are fine to take that responsibility, saying this is ASCII investment manager's client giving advice to ASCII investment manager's clients. So the person who's created the portfolio doesn't need to have the license. Fees is charged quarterly. For specific advisors, we have received requests in the past that they wanted to charge annually upfront. There is enough flexibility here. As long as your clients know it and are clear about it, we can charge in advance, in arrears, annual, quarterly, any combination you want. It just needs to be disclosed upfront before the client sign up. With the physical document we shared as per latest SEBI charters. So SEBI has said wet signature, instead of, they just are against the fact of the click saying, I'm okay, I accept. So we will have the advisory agreement PDF and put in the so-called account section that I'll show you just now. The clients are expected to sign that on e-sign is also fine, as long as they scribble it using their mouse or hands on the phone. That's fine as per our legal counsel. Obviously, physical agreement is the best. So we will also email it to them. They can print it and sign it. We can you can download it and get it signed by them. All of those things are fine. But currently working with the assumption that a PDF with the signature of client is acceptable. Can we have the backtested performance reports of some of your models since 5 years? Yeah, of course. I'll just show you a couple of them right away as well. Just to clarify the e-sign part, right? So there are confusions there and various people have opined in various ways. What is not acceptable at all is just saying that client said, I accept on something and that's okay. That's not acceptable. But the various modes of digital signature are perfectly fine, which means if you use Aadhaar e-sign or signature through drawing on the PDF, which is same as manually drawing it. So there is no aversion to the fact that there has to be a physical paper. It's more like clients click on I accept left, right, and center. Like they don't care. They don't read it. And then later on, they will come back saying, oh, but I thought this is not a legal agreement. So that's the border, the gray area. So it's not that physical paper has to be signed, but the client has to carry out the act of actually either signing or using the Aadhaar and knowing that, okay, this sounds very legal now. That's more important because I accept you do it for all sorts of apps anyway. So that's SEBI's angst that you can't just say that client clicked I accept, so it's fine. Okay. Now, one more question from Abhishek is, can advisor get other variables other than showed by us to customize the portfolio? So we're working on adding a few more things here. I'll walk you through that towards the end. Short answer is we are also creating an advanced platform, which as an advanced section within the same platform where an advisor can play around with a lot more factors, design their own factors and so on and so forth. But that will obviously have added costs and added AUM requirements. So if you're just starting afresh, it's easier to just work with all this, which is readily available with no cost. So you can build these funds without any charge. Only when your clients actually use it, either of us get paid. For the advanced platform, however, there is a fixed cost. And hence, that can be waived only if your AUM with us is already above a certain amount, say about 100 crores or so. In which case, anyway, we know that our income is large enough, so it doesn't matter if we just give you the advanced tools. Otherwise, it'll be a few lakhs of actual cost. So it's not advisable unless you want to build some fairly good, complex strategies. The other approach that does work though is, whatever you're missing, keep telling us that, we would have liked to have included this. We'll try to include that in the standard portfolios itself and the standard factors itself. So the list is not constrained by keeping it to 5 or 6. We can make it 20. So if you think that some factors you like, we can make it available there. That won't cost you anything. That is just the extension of the platform. We don't want to add too much right at the start because that way users should tell us what they want instead of us saying, here's 35 that are done and dusted. On the recording, we will be sharing the recording on YouTube as well as on email. Execution is automated. I'll just show you the demonstration for a client so that it's easier. So as we saw here now, webinar demo, we saw that this is a demo created fund for webinar. We updated the description. Now let's see how clients are added, and then we'll see how the client sees. So for clients, we can have three categories: advisory, introduction, mixed. Advisory is, let's work with simply advisory. Introduction only is when you don't care about the client seeing your portfolio, somebody else's portfolios. You just think that MakeMyFund is a good platform for them to build their own funds. You're not even trying to sell them funds that you had created. So that's only for a few advisors who don't want to be very active. They just say, okay, I don't want to be the manager. I still want somebody else to be the manager. So let them see what ASCII has created as ready funds. So that's less used. More actively used advisory. When you say that I want to design a few eFunds, and that's what today's webinar is about. And I want to share them with my clients. So that's advisory clients. So here you just add the client's email, could be anything. So if you create, add an email here, you get this link. You can copy this link and you send a mail to a client. We'll add a functionality here where we can also send a mail, but your clients will obviously be confused as to why is ASCII emailing them. So you can email from your own personal email accounts or your business email account and copy this link in that and say, tell the client, register here and check out my portfolios. And so the clients then will be mapped to you automatically, because this token that you see here is unique to this client and you, that combination. And so you can also keep stock of how are your clients currently. So clients signed up in my demo case, for example, all these clients signed up. Whereas these clients are awaiting sign up. So we just added this, right? Temp demo 4242. It's awaiting sign up. So yeah, you can see all that. Now let's see how clients see it, right? Before that, let me see if there are any questions. No. So let's log out of here as an advisor and let's see how clients see it. Now this is like, remember, this is a demo ASCII account. So the client is essentially also, this is a client of SOR, which is me. Now see how things have changed a bit. You see this logo shows up. So this logo will be your logo. This in this case is, since it's SOR is my own login, so ASCII is the logo. MakeMyFund logo will stay, but you get additional logo, which is your logo. This will stay like this throughout the site, wherever the client goes. You see, these things are reduced now. On the top right, we don't see any more advisory funds, clients, none of that, because this is a client logging in. So you see invest, my funds, dashboard, account. So this invest is what you had put up, as we just saw now, webinar demo. You see that this fund we created just today, we say this is created as a demo fund for the webinar. And it's a top 200 universe with 29 stocks roughly. This is what the client sees, that overall returns of 14.1%, 2007 to now. 1 year returns of 36%, 5 year returns of 20.5% annualized. It was created on 4th June. It doesn't have to be shared on 4th June. Today happens to be both, but it could be created on last year and shared only this year. Before I see how the client see it, let's see if there any question here. Yeah, there's one question. Can this be integrated with existing apps? Yes, it depends on which app it is. We can explore that. Again, that other app has to be open to integrating. From our side, there is no problem. We are happy to integrate. So now this your client sees this portfolio and says, okay, I got one webinar demo, then I have got one large cap demo. This is a demo eFund. This was created again today. This is a demo 15th March. This was created obviously on 15th March. And this has 6 stocks. So it's a very concentrated portfolio. This has 1 year returns of 27, 5 years of 22. Then there is another one called Top 200 Growth and Quality. Some description here, large cap stocks with high growth and good quality in ROE. Okay. It's again 200 stocks. This has 15% returns. Last 1 year has been 38. This was created 3 days ago. So I can, as a client, browse through all this and say, okay, this webinar demo looks good. Let's see what it has. Now this is a client seeing it, right? So client doesn't see all those steps that you saw as an advisor, that create a fund, choose the universe, all that. Because we think that retail clients, which are your clients, may not want to be that engaged in portfolio creation. After all, we are trying to get you to become the fund manager. So the clients also don't have to be another fund manager layer themselves. So they say, okay, there's some description saying, okay, this is the fund which we've been shared. They see this performance now saying, this looks good, 3 year, 1 year, all sensible. And so client may say, okay, I don't like this, so let me go back, look at another fund, or I like it enough, so let's go next. Next essentially is C portfolio. So this client is already logged in, so they can obviously get to see the portfolio, the same portfolio we saw earlier, Castrol page, etc., etc. Now let's look at how they'll execute it, right? That's important. So next, the name is inherited because the client can't change that name. Now the client has to put in the amount. So the client says, okay, I want to put 50,000 rupees only. I don't want to put 5 lakh. And so this is save and invest now. We use a small case gateway for connecting to these brokers. There are 11 brokers that we're tied up with: Zerodha, HDFC Securities, 5paisa, Angel, Axis, IIFL Securities, Trustline, Upstocks, Alice Blue, Edelweiss, Motilal Oswal. Any of these brokers, your client has an online broking account, they can just use that. In my case, Zerodha is the one I have personally. So I essentially see this interface. What do I see here is, I see that there are 13 stocks. Why did it become 13? Because I put only 50,000 rupees. So 49,796 is my total order. That's internal optimization done at our end. If I put 5 lakh, this will be again 29 stocks. Because all these are 1 stocks each, that gets reduced. So I see all this. If I review orders and execute now, this will go to my login page where I can actually carry out the trades. If I don't, then it will simply become unexecuted trade. So whatever trade execution happens, the fills come back to us and we know that this has been invested. So that's just one example of a portfolio. Client himself or herself can also save and invest later. So I'll come to that in a second. Let's just take the question. Returns above are excluding the fees. Yes, they are excluding fees. They are the net of transaction costs though. So brokerage and all is taken out. We assume about 10 basis points of brokerage, 15 basis points of STT and other things. So that's already taken out. Only fees is gross because we don't know. It varies from person to person. So we don't want to include a standard number. So a client may also say that I like this, but I don't want to invest just yet. I just want to track it for a while. So the client can also include it in his or her dashboard. As you can see now, webinar demo has gone to the client's dashboard. Amount is 49,186. It's not 5 lakhs because client chose only 49,000. Paper status is still paper, but if I had executed that order just now, it would have been live. The number of stocks obviously is lesser than it is in the advisor's portfolio because it's only 50,000. Client can again execute, download, share, delete, as the case may be. As a client, they may also have multiple portfolios copied or just 1 or 2. As you can see here, this now is gone away. Why is that? Because it shows up in now MakeMyFund. So in MakeMyFund, whatever I selected, webinar demo I've taken, it shows twice because I saved once for execution, once for non-execution. But in general, clients will either execute or not execute. So they won't cancel. If they cancel at the last minute, it will show up again. But normally it's just once. So it shows up as this MakeMyFund, which is different from Invest, which is the full list. Everything is there, which I'm not subscribed to. Others that I can buy in future. That's how a client would see it. I guess that completes the sequence of steps as how an advisor creates a new fund and saves it in the dashboard, shares it with the clients, adds a client logs in, sees the fund, likes it, executes it. That's the full sequence as we saw it. Here's a question from Sheetal. Return shown above is excluding of fees. I already talked about. Can a sub-broker execute the transaction on behalf of a client? It's a bit of a gray area because SEBI is not very fond of clients handing over their login password to some third party. So the client has to ideally log in using his or her broking account. What you can do though, this is actually allowed and it's compliant, is a client can see it in the dashboard that I have taken this portfolio, what do you call it, webinar demo, and I want to execute through my sub-broker. I have to execute through my broker offline. So just download this portfolio and email it to the sub-broker, as in the broker, and the execution is offline, because see, the count is already here, so the broker knows what to buy. Page Industries 1 stock, Castrol India 21 stocks, Hindustan Unilever 1 stock, Gujarat Gas 3 stocks. So it's precise, so you don't have to worry about accuracy and all that, and the execution can happen offline also. Sub-broker login, again, I personally don't know the logistics of the regulation and what is allowed and disallowed if you use a sub-broker login. But if you're asking if the client has a sub-broker login, can they use it? Yeah, of course they can use it. That's like as good as the broker login. Meaning, from the perspective of regulations, sub-broker is underwritten by the broker. They have done the KYC and so on. Sub-broker is real. You're given a login to your clients, but the underlying platform that the regulator sees is still the broker's platform. Because the client engages with the exchange through the broker. So from that angle, it's fine. So client can have a login password with you, which they use for normally buying and selling securities on the exchange. If they are able to do that, then they should be able to do this also. Just that we'll have to integrate the APIs. So we'll have to work with the sub-broker to enable this direct execution. Got it. So that's how the full flow was. Technically, a client can also build a new fund of their own, following the same logic. But and in that case, again, will technically can charge the client the full fees. But you can specify to us that if a client builds a fund from scratch, charge them lesser fees. The client comes in directly, charge them higher. Client uses one of these funds, which is prepared by you, charge them 1%. Client comes through and builds their own funds, then don't charge them 1%, charge them 0.5%. That's up to you. You can tell us to charge 1% for both. It's your call. Our floor is 0.25 in both cases, so we are neutral to how you price it above that. Cool. So that is on this front. Let me see if there are any other questions. Okay, super. So this is where we are in terms of the client login. Now, assume that a client, one thing is you send the clients emails, right? Where you actually tell them to come to this platform and all that. It could also happen that you want to do this as a marketing tool as well. It doesn't have to be purely after your client is already acquired. You can even acquire clients to this route. What I mean by that is, if you come to MakeMyFund.in, you will see this site, right? It obviously has got nothing to do with an individual broker, client or advisor. Till you log in, it is a neutral site. Now here, if you go to browse ready eFunds, that goes to the public eFunds that have created by ASCII itself. MakeMyFund itself, MakeMyFund team, which are there, which you can browse and invest in at 0.25% as a typical client. But that's not our primary focus. If you So what happens with every advisor that comes our way is that we create this sort of a page for them. So MakeMyFund.in/ASCII. So let's say your company name is say Innovative Finance or whatever, or let's just say India Growth Finance. So it will be MakeMyFund.in/India Growth. And then when people go to that page, everything else looks the same, but you start to have this logo, and that's not the end of it. If a client lands on this page and they do whatever in this page, if they ultimately end up, so let's say a client has just landed on this page you use for digital marketing, you told a lot of friends of yours about this, they went there and they said, okay, let me just check out a few funds. You see now the public eFunds page has changed. So the client has not logged in, I have not logged in, but the top here it says MakeMyFund.in/public-fund/ASQI. So this will be your name, whatever, /your name. And it will be your funds, whatever you created here. So clients only see your funds after they come on to that primary fund. They are not even logged in yet. Now I can again check out what this webinar demo fund is. I may like it. If I say see portfolio, now you see suddenly you're forced to create an account. Now, if at this stage I create an account, then that client is mapped to you automatically. That becomes your client, and they explicitly see that in their agreement. The fees that comes from them is shared with you, and so on and so forth. So What I'm trying to say is that you can use this for marketing as well. This page, makemyfund.in/your name, becomes the marketing tool for you without having to spend anything extra. You just the whole site is ready as it is. We are happy for individual advisors telling us that my landing page doesn't need to look like this. This is great, but I want to spend that extra time and energy, and my web team will create a landing page. Let that page look like that. So you give us an HTML code and we'll put that up. That's fine. And then it can still have these buttons, but look and feel of your choice. That's also fine. If you want to spend that energy and create it, give us the code. So long as it works fine, we're happy with it. And you can also change the look and feel of this page if you want. What we want to essentially leave there is all these things. The actual card should be there. The way you want to structure it is your call. You can even market the specific page. So this page itself can become a marketing tool. You don't have to market MakeMyFund.in/ASCII. You can market just this page saying, check out the funds I have created. Don't have to go to the main page and then get directed here. And last but not the least, you can actually share individual links of the fund itself. So you can actually market at the level of the client fund preview of this specific page. You can't copy it from here. You have to share the link from your dashboard. But even this fund in standalone case can be marketed, saying I've created this Tata Group company or say Birla Group company fund or like whatever, some private sector bank fund or something. You create that and market just that fund also. That's fine as well. So we enable all of that. Okay, there's a couple of questions here. Can you combine MF platforms, which is Fund Sage and MakeMyFund in one platform? Yeah, actually, good question you asked. So there are two things we're doing. I was thinking of including that in coming soon, but it's now dovetailing nicely here as well. Coming soon is 3-4 things. One is we want to create mutual fund replicators here. We talked about it in another previous webinar, where you can actually say, I want to replicate my favorite 5 mutual funds, equity mutual funds, without paying them the fees. Obviously, since they publish their portfolios, we can actually track it. And we can then further optimize it by saying, I don't want to have 200 stocks because the last stock is like 0.1%, 0.2%. I just want a focus portfolio of 25 stocks, which are the highest weight in these 5 mutual funds that I like. So you can create that. So that page is just maybe a week away. So you can then select your funds and create. There's no backtesting there. It's basically just saying these 5 funds, their stocks, 25 stocks capped, show me the portfolio, save it, and execute it. And when you save it, you don't have to worry about the stocks getting updated. We'll update it. Just the mutual funds keep adding new stocks. We'll save not just the stocks, but the configuration that these 5 or these 4 funds and their proportions, that 30% to this fund, 20% to that, 10% to that. So that's coming up soon. Secondly, bonds and debt mutual funds are also coming up. Debt mutual funds already covered in our Fund Sage platform. So there, the most commonly visited page is best funds for me. So that we want to integrate here and say, just on same platform, you can also quickly check out debt mutual funds, which are good for various purposes. So you can check that out. In future, we're adding a multi-asset framework as well. So you can just have ETFs instead of stocks to build your funds. So then as an advisor, you can build an ETF-based fund. What I'm talking about is basically Nifty ETF, Quality ETF, Gold, NASDAQ, whatever is available in India, GSEC, then Bharat Bond, InvITs, such as IndiGrid and all that. So you can create a portfolio of all of this, and that can be executed also on the same thing because all of these are available on the markets as stock-like execution. And then and full-fledged MF portfolio we are adding in future. That won't be for execution. That will be only for advice. But that's for you to use for advising your clients and customizing it by client differently. So yeah, that's, I guess, the difference. Jayesh's question was, can this platform take care of position sizing? Yes, it does. So as we saw, the 5 lakh portfolio that we created, webinar demo, it had 30 stocks, 29 stocks. Whereas once a client used it, when we went to the client flow, the client used only like 19 stocks or something. because we optimized it for the size. And that's a complex process. It's not as simple as saying round it down, because when you start rounding, a stock which is 5,000 rupees and stock which is 50,000, sorry, 50 rupees gets treated same. So there's a slightly complex integer optimization logic used to minimize the distance from ideal, and still work with the fact that some stocks are 3,000 rupees, some stocks are 50 rupees. And that's got nothing to do with the underlying quality. It's just a historical accident. So yeah, we do take care of that very clearly. Okay. One's question is, in terms of tracking restructuring post execution, do we send alerts when the client has deviated from suggested position sizing? Yes. So there are two things to keep in mind here. We have a quarterly rebalancing. We can make it monthly for clients who choose monthly as well, but by default it's quarterly. So at the end of each calendar quarter, we send out an email to clients saying, all advisors and their clients, saying if it's a paper portfolio, to get auto rebalance, that doesn't need any change. But if it's a live portfolio, we create the orders automatically at the back end, send the clients a link. They click on that link, they go straight out to the execution page where they, after they log in, of course. So they're asked to log in. Once they log in, without again having to go back to the link, they automatically get taken to the execution page, which straight away says, here's the orders that need to go to the broker. And they don't need to do anything more than just say, okay, log in and say, okay. And then that gets executed. If the client's advisors have changed the portfolio in between, they get the rebalance portfolio that they can then accept or tweak before sending it to their clients. So that works as well. The rebalance, by the way, is not only at a percent level, it's at a stock level also, and that's also optimized for positions. So one rebalance is to say, okay, this was 3%, now it's become 2.1%. The other rebalance is saying that it was 3% and it is now 2.1%, but when it was 3%, for a 50,000 rupee portfolio, that meant 22 stocks. And for 2.1, it means 17 stocks. So 5 stocks need to go out. For a 50 lakh portfolio, it will be a different number. So rebalancing is also sent to clients as number of stocks rebalancing, not a percent rebalancing. So it's a very precise number. They can just execute. Okay. This question, can we also have customized URLs in your company brand from outside? Inside will be the same flow. We are generally averse to doing pure white labeling, right? So we don't want to be in the business of just pure living at the back end. But for large enough AUM, we can think about that. In general, we want to explicitly mention that this is run by ASCII and this is a MakeMyFund offering. Look and feel, you can change in any way you want. The flow can remain the same. We want to obviously keep it constrained to the fact that the way clients see the buttons and cards and portfolios can change, but the units have to remain the same. When there's a graph, the graph remains as a graph. You can remove some things, but we won't be able to add too many new things because that changes the fundamental logic. But within those constraints, if you want to make everything look of a different color, dramatically shift the look and feel of it, that's fine. It's up to you. So long as you carry out the coding and the HTML and testing and everything, for us to provide that is fine. We just want to make sure that the logo and mention of ASCII remains in all cases. The look and feel is your call. Okay. Is the portal, so Vanita's question was, is this portal getting linked with the demat account in specified counter like Zerodha? So no, we don't, we use only the interface to carry out the orders, but we don't link to the demat. So client retains the control over the demat. We have no ability to change the demat holdings or even read the demat holdings. So this is merely to say, we take you to a broker site with these orders. You tell the broker after logging in that please execute these orders, and that's where the discussion ends for us. So we keep track of the fact that you bought these stocks. The broker tells us that these stocks were bought or not bought. But then what happened to the stocks after that is up to you. And executed automatically like small case. We're using small case for the gateway purposes. So yeah, it will be same functionality. So it shouldn't be a problem. All tradable securities on NSE BSE currently no, because we don't have futures and options currently. But anything which is like stocks, like ETFs are fine. Anything which is in NSE's capital markets cash segment is on. Ritesh's question is, what's the minimum amount that a client can start investing? What is the minimum number of stocks that we can create in the portfolio? So we have in the past gotten some feedback saying 25 might be constraining, so make it smaller. So we are working on that. There is no logical algorithmic lower limit to number of stocks. We can just work with even one stock, but obviously that's super risky. So we thought 25 is the logical limit, but we're going to reduce it to 5. So you can work with stocks as portfolios as concentrated as 5 stocks. We're working on figuring out a diversification metric, so you can just mentally be at peace that this is sufficiently diversified or not. Forget the maths involved. It essentially will tell you if benchmark diversification index is 100, are you 70, 80, or you 10? Which means, for example, a single stock would have a diversification index of 0. 2 stocks will have it at 10, and then 3, 4 will suddenly start to gradually go up. At 20, you are very close to this thing. But 20 of the same sector will obviously have it more like 60, 70, or 50, 60. 20 of very different sectors will have it close to 90. So we can figure that out. The logic is at our end, but you can use that to say, okay, 5 stocks, but 5 from 5 very different sectors, uncorrelated, then I'm actually pretty okay. 5 from same sector, so let's say all IT, obviously it's like a sector fund. Subject to all that, it's fine. Then currently the minimum amount we have tried with as low as 5,000 rupees. That works. Just that number of stocks comes down quite a bit. So if you design a 5-stock portfolio or a 10-stock portfolio proactively, and then bring in clients at even as much as little as 15,000-20,000 rupees or 10,000 rupees, that's also fine. Vanita's question is, does your investment return include dividends? Yes, it does include. So it's total returns for both benchmark and the portfolio. There's another question saying, RIA can't take a fees from any external vendor other than client. How does that fee collection go for RIAs? So if you're an RIA yourself, we can include an advisory agreement which is customized to your RIA license. So people come to MakeMyFund, but when they register, instead of signing an agreement with ASCII investment managers, they sign an agreement with, say, Vanita, your firm. I think it's C Profit. So they sign it with C Profit, and then the invoice is raised, and you can give us invoices, but we can just do it automatically ourselves once we give us some parameters like GST and all that. Invoice is automated, so the clients then pay through Razorpay. The bank account it goes to will be yours. In which case the payment is reverse. You will have to pay us instead of us paying you. But that's the same thing. So there is no restriction on who gets paid and who does it have to be paid onwards. Okay, so there is another one from Jayesh, which is an individual with a non-SEBI RIA. I can create a portfolio, showcase it, give it to my clients, invest through any of our brokers. Yes. So that's the intent. So if you're not an RIA, you can still create a portfolio, show it to anybody else you want, and they can invest in it and through their online broking account with any of the 11 that I showed, and that's it. They pay us a fees for doing that, and we pay you from that. So while we wait for new questions, we just additionally say what else is coming up new. So we talked about bonds, debt mutual funds, multi-asset funds, which again you can create as well as invest in. And the last but not the least, we're also coming up with tokenized bonds. So generally bonds have a face value of 1 lakh, 50 lakh, 1 lakh, 10 lakh, sometimes even 1 crore. We want to bring it down to 100 rupees. So we want to make bonds like stocks. You can invest at 100 rupees and so on and so forth. So there is a project in the works currently at our end where we are essentially going to offer tokenized bonds, which just are a pass-through. So we don't take any risk on the intermediary. We have the same risk as the underlying. And generally we'll stick to AAA and GSEC in this. So once we make that live, then just as you can build. So we tried initially to do MakeMyFund with bonds, but we realized that you need 1 crore for that, because each bond was like 10 lakh or 1 lakh face value. So we said, what can we do to make it like make my fund equity is to make it tokenized. So that's coming up soon as well. And once we perfect that technology, which is tokenization, then we can offer it to you gradually, not immediately, over the next few months. Other assets also, alternate assets in tokenized form. So we're not going to do AIF and all because that's not allowed by regulation. But commercial real estate, residential real estate, international stocks, and other such units which are not covered by regulation currently or not prohibited by regulation currently. So, and unlisted equities. So all of that will also be part of that platform in future. There is one more question here. We have flat fee of 0.25. So fees amount, our fees is 0.25 per annum. You can charge over and above that. So if you, and this is not two different agreements. Once you bring in, you come on board as a, so once you register, you don't become automatically an advisor. You have to tell us that, email us saying, I have registered as a standard user. I want to become an advisor. We'll convert your account into an advisor account. So that's a manual process. That's ensured so that we can do KYC, etc., which is tighter for advisors. Just a little bit more careful. Now, once you become advisor for us and you create eFunds for your clients and all that, and you start to onboard clients, we create an agreement customized to you. So you tell us that I want to charge 1%. You tell us you want to charge 0.5%. That's up to you. So whatever you tell us is what we execute in the agreement. Vanita's question was, we still need to understand as to how we can execute by clicking Make My Fund, and from there in small case fee too. Is there? No, there is no small case fees. That is paid by us as aggregate level as a backend. That is not charged to anyone. You only pay brokerage, which is there. But there is no small case fee. There is only ASCII fees of 0.25% and your fees, whatever it might be, and the brokerage. That's all. Fee sharing, we talked about that. So our floor is always 0.25% per annum of assets. Over and above that, you can charge anything. Normally, people charge 1%. We keep 0.25. They keep 0.75. Let me just go back up and see if I missed any question. No, it doesn't look like it. Okay. So let me take some of the last questions then. GST on fees, yes, there is GST on fees. It's 1.25% plus GST. So normally we'll charge 1% plus GST, in which case you get 0.25. 0.75. We get 0.25. You charge 1%, there will be 1.25% plus GST. The capping of fees of rupees 1.25 lakh per annum max for our large client, yes, that's fine. So our own bias is to cap the fees at 1 lakh or so per client. But there again, we can work with the customizations based on advisors. So for your clients, if you want to charge capped at 1 lakh, let us know. Again, that's 75 and 25. You want to charge 1.25 cap, which case you keep 1, we keep 25, that's fine. We are okay with the cap because that's a high quality problem. If a client does 5 crores through us and we still charge them 1.25 lakh, that's okay. We don't have a problem with that. Got it. Does the person has to be RIA to be registered as an advisor? No. The person just has to have the standard KYC. That's enough for us. If this is assuming the agreement is in our name, in which case they don't need to be RIA or NISM certified. So the person's details, so you can straight away email us at this ID. I'm typing it here, info@ascii.in. There is also, you can talk to me as well directly. I'm Swapnil, so sp@ascii.in. There is a number also. I'll just put that number out there. just digging out the number, so you can use that number as well. So I think currently it's stuck somewhere. Anyway, so these two email IDs are useful. You can use any of these for the time being. And what we'll do is we'll have someone assigned to you as a relationship manager as well, so you can keep asking more questions in future. It doesn't get constrained by my time then, and you can get quicker response. So feel free to email us at these addresses. Okay, I got the number as well. This is the number. So you can call on this number or message on this number, and we'll obviously get back to you. I think what I've seen happening in the past as being useful is if we walk you through a demo of the whole thing, a little bit more hands-on, because normally it tends to be quite a bit to take in one specific webinar. So it's better to sort of actually go through various nuances, ask all your questions again, and then discuss all the fees matters and other nuances. So it might be better if we set up a follow-on session one-to-one based on your interests. Great. I think that's pretty much it at our end right now. Are there any other questions? Please type it here, or else you can write to these addresses or get in touch with this number, which is our formal official number. Great. Thank you so much, Vanita. Thanks so much, everyone, for listening patiently. I will look forward to hearing from you. Thanks, Sheetal. And thanks, Jayesh, for your feedback and taking the time to go through. Thanks, Janki. Thanks, Avish. Thanks, Funny. Thanks, Avik. Super. Thank you. I will look forward to hearing from all of you. Let us know if you have any queries. And with that, let me wish you a good day and stop the session. Thanks.